we've got the management, Mr. Akash Agarwal, the whole-time director at V2 Retail, joining us on the show. Mr. Agarwal, hi, good morning, and in fact, good to be speaking with you again. Let's start by talking about your Q1 update. Your Q1 has seen revenue grow by over 58%, while the same-store sales growth remained healthy as well. What were the key growth drivers, and how much of this momentum is sustainable for the rest of the year?
Yeah, hi. So thanks for having me. And
Hi.
again, we were able to, exceed the guidance that we had given of 50%. And hopefully we can continue throughout the year. And it was driven mainly by the 7.5% SSSG that we showed with our mature old stores. And with an addition of 57 stores this quarter and all the 134 stores that we opened last year, it's all driving good sales because most of our new stores are profitable, EBITDA positive, and we've got a very good response through our geographies wherever we've opened a new store. So I think the momentum is good, and we are very positive about the future outlook.
Okay, that sounds good. And Mr. Agarwal, was the revenue growth primarily driven by network expansion? Was it, how much of it came from your relatively newer stores, and how much of it came from your existing stores? What's that mix looking like?
So about 7.5% is from the old stores, the stores that we had at the end of FY25, and about 50% was through the new area that we have added. So that's the split between the two.
Okay, that sounds good. And also, let's talk about your guidance. Overall for the entire year, you've guided for SSSG between 8 and 10%. Q1 has come in at 7.5%. Do you expect growth to accelerate over the coming quarters now that you've got the entire festive season that will start to kick in? And this 8 to 10% number, how easy or how difficult does that look to achieve right now?
I think over the period of the whole year, 8 to 10% will be achievable. There were less wedding dates in the first quarter, so that had a negative impact for about 20-25 days. But I think we should be able to cover it up throughout the year. Anything above 7% is a very good SSSG number because our base is much higher now. But yes, for the whole year, the guidance is still 8 to 10% SSSG.
So that sounds good. And also, you've added about 57 stores in Q1. And the last time we spoke, I remember you had guided for 170 to 180 additions this year with a possibility of even crossing 200. Is the expansion on track? And are you seeing enough demand to support this pace? Because your Q1 store addition has been very healthy.
I think that possibility has become the new target now. We will open more than 200 stores this year. Like I said, we are getting a very strong momentum, and we entered almost 9 new states in the last 18 months or so. And throughout geographies, throughout states, customers are loving us. Customers are loving our assortment. They're loving the product. And the new stores that we've opened, they're already operating at a very high level of 750 to 800 rupees per square feet of sale. So I think these numbers are very promising, and that's why we've increased our store opening guidance for this year also. We will open more than 200 stores.
Okay, sounds very good on that front. And you've also guided for around 50% revenue growth in FY27. After a strong first quarter, you've already seen more than that in terms of your Q1 revenue itself. While you've hiked your store addition guidance, are you looking at hiking your overall top line guidance too?
No, I think we would like to stick to 50%.
Okay.
It's always better to underguide and overperform. And I think we'll stick to that.
Sounds good on that front. And your sales per square foot, you were talking about how for the newer stores also that's looking very good. That metric also for you in Q1 has improved sequentially from the March quarter. Help us understand if you are seeing this as the beginning of a sustained recovery in store productivity.
So this is not new. I think over the last 10 quarters or so, we have been consistent with our growth and performance improvement. A lot of work has been going into the back end, into assortment, into automations. And I think we've been consistently showing this, and hopefully it continues in the future.
Okay, sounds good on that front as well. And Mr. Agarwal, you highlighted better merchandise planning, higher sell-through and lower markdowns this quarter. What impact could these measures have on margins in the longer term? Can we expect to see margins back into the high teens category?
Because we are guiding for more than 50% revenue growth and we are opening so much new area, margin expansion is a challenge because new stores start at about 70% of old stores throughput. But as these stores mature and the new area that we open is a small percentage of our total footprint, then you will see the margin expansion.
Okay, and if you can give me a timeline as to when that would be.
I think the way things are going, we would continue to expand aggressively over the next 3 to 5 years, considering that the momentum is good and the numbers are good without compromising on any profitability metrics. So, high growth period, it's tough to do the margin expansion. But I think after we get out of that aggressive expansion phase, then you will see the operating leverage kick in and the maturity of the new stores.
So, would it be safe to conclude that margin expansion beyond that 19% peak that we've seen recently would be seen after, let's say, 3 to 5 years, or can that come earlier?
So again, like because we are guiding for a revenue growth of more than 50%, we are not guiding, we are guiding for the similar margin levels. Once we decelerate or we are not accelerating as fast, then we will see the margin expansion.
Sounds good. And lastly, before I let you go, Mr. Agarwal, can you give me a sense on ground? What is the demand for value retail shaping up to be? There is lots of new competition in this space as well. And you are seeing, and in fact, we were speaking to a couple of dealers and they did say that casualization is the new premiumization. That's a statement I've been hearing a lot. Can you attest whether this is a trend that you're seeing on ground as well? And if that is faring well for value retail as a segment?
So, see, there are two things you need to understand here. One, unorganized retail is still more than 60% in this price segment in our country. So, there's a huge scope for organized retail to take that chunk of the pie. And second, I would say at least 50 to 60% of the population is still not a customer yet because they don't fall into that income bracket. So as the per capita income of the country improves every year, people have more disposable income. They will become customers and enter the target market. So, like I said, next 10 years, it's going to be a high growing CAGR sector, especially organized value fashion retail.
Okay, sounds good. And as always, Mr. Agarwal, this has been such a good conversation. Every time I have been speaking to you, you've been hiking your margin guidance. So let's keep that trend going and hope to be speaking with you soon as well. Thank you so much for your time.
Thank you for having me.
Thank you so much.